A break below, however, could trigger a shift in momentum. Now let's break it down even further by moving into the daily time frame, where things start to get granular and where short-term trading decisions are made. This is the time frame where intraday traders and swing traders keep their eyes glued to every move. And right now, Bitcoin is showing some very interesting behavior. On the daily chart, Bitcoin is trading around $113,938, and here we can see in high detail how the market reacted to that key $109,000 to $114,000 zone. Just like on the weekly and monthly charts, this level has been absolutely critical. But here on the daily, it becomes even clearer how price action has respected this zone repeatedly as both resistance and support. Zooming into recent price action, you'll notice that after the breakout above 114K, price pushed aggressively into the 120K plus region, forming a sharp bullish move with minimal retracement. This strong impulse was fast and aggressive, a sign of institutional activity, or short squeezes. But after hitting a high near 123K, Bitcoin began to show signs of exhaustion. Over the last several daily candles, we've seen a steady pullback, and now price is back down near the same 114K zone, right where the breakout originally happened. This current drop is not necessarily bearish. In fact, if you look closely, BTC appears to be in the middle of a retest, tapping back into the previous resistance zone to confirm it as support. So far, today's candle is green, and buyers are trying to hold the level. If this daily candle closes bullish, it could serve as confirmation that the level is holding, and price may be ready for a bounce. Below the 114K zone, there's another interesting level that was respected several times in June, around 102K, 105K. You can see on the chart that price dipped into this area multiple times before surging higher. This zone acted as a short-term accumulation range before the breakout, and it remains valid as a secondary support level if BTC breaks below 109K again. Also, let's not forget the major demand zone down at 77K, which we identified earlier, on the monthly and weekly charts. While it's far away from current price action, that zone still marks the origin of the current uptrend and is likely to remain protected by long-term investors and institutions. If Bitcoin ever returns to that level, it would likely be a high-probability buying zone. But for now, all eyes are on the 109K to 114K zone. From a price action standpoint, we're seeing lower highs forming during this pullback, but they haven't yet broken structure. The higher low is still intact, meaning the market is technically bullish as long as price does not break below 109K on a closing basis. We're in the classic range of pullback versus reversal, and how price reacts over the next couple of days will likely decide the short-term trend. As for candlestick patterns, we haven't seen a strong reversal pattern yet, but we are starting to see signs of demand around this level.